Because I think it goes back to, Dan, having these assumptions that we've built on with our economic framework and as using tools and certain schools of economics and everything else. But a lot of it's just common sense. That these things just don't work. We can get into the theory and the numbers and the data, and a lot of that matters. I agree. But some of it, don't you think, is just common sense? Hello. Welcome again to an episode on the Let People Prosper show. My name is Dr. Vance Ginn. I hope you're having a prosperous day. Well, today I have on a former guest and one who's continuing to fight for freedom and prosperity, and it's none other than Dr. Dan Mitchell. Dan, welcome to the Let People Prosper show.
Hey, Vance, good to be with you.
Well, it's a pleasure to have you on again. And we had a great conversation right around a year ago now. And there's been a lot happen within that year. So we've got a lot to talk about when it comes from junk fees coming out of the Biden administration to excessive spending and taxation out of the federal government, but also states that we really need to hit on. So I thought, who else to turn to than to you, Dan? So it's going to be a good conversation. Before we get going too far, let me go ahead and read your short bio here for the audience. So Dan Mitchell is co-founder of the Center for Freedom and Prosperity and chairman of the board. He is an expert in international tax competition and supply side tax policy. So with all that stuff going on, what's motivating you to do what you're doing now lately on your International Liberty blog and other things that you've been working on?
Well, unfortunately, there's too many things that people like you and me have to work on because the government is intervening and interfering and mucking things up in many different areas. My bread and butter over the years has always been public finance economics, the growing burden of government spending, punitive class warfare-based tax systems. Those are the things that I write on month in, month out, year in, year out. But of course, I also have to write about lots of issues like trade and overregulation and bad monetary policy. I mean, I'd like to never have to write about inflation, but of course, the last couple of years it's become an issue, and a lot of people, even some of our friends, don't really understand the issue very well. And so, as a economist, I sort of get pulled in lots of different directions. But again, public finance is where I prefer to spend my time. But sometimes I have to diversify myself.
That's good. Kind of your specialization, right, is in public finance, but your division of labor is a little bit broader on the things that you could talk about. Because I think it goes back to, Dan, having these assumptions that we've built on with our economic framework and as using tools and certain schools of economics and everything else. But a lot of it's just common sense. That these things just don't work. We can get into the theory and the numbers and the data, and a lot of that matters. I agree. But some of it, don't you think, is just common sense?
If you can't, as an economist, explain something with common sense language for a lay audience, then I think you're doing something wrong. Now, I'm not just talking about the fact that some people like to impress by using jargon. If we're talking about tax rates, I mean, we could talk about elasticities and stuff like that. And a normal audience are going to sort of get lost because they're not familiar with those terms. So why use them? Just talk about some people are more sensitive to tax rates than others. It's just common sense. A lot of economists sometimes don't talk in a way that makes it very accessible. And then, of course, some economists are wrong. And so they're never going to make any sense. Imagine being an economist and being asked to defend price controls or something like that. You'd have to really twist yourself in knots and suspend reality because presumably at some point you actually learned a little bit of basic microeconomics.
Yes, that's so true. One of the things that's been going on now, Dan, and I'd like to get your thoughts on this is, we have this shrinkflation. President Biden had a tweet recently about shrinkflation. There's also talk about greedflation. If you listen to Senator Elizabeth Warren and others, whenever you're looking at inflation and talking to folks about it, how do you explain where it comes from?
Milton Friedman educated us a long time ago, and frankly, lots of economists knew this well before Milton Friedman was on the scene. But Milton Friedman was famous for reminding us that inflation is a monetary phenomenon. Yes, you can have one price for one product go up because of increased demand or technological change, but for the overall price level to increase, there has to be government involvement, printing too much money. Now, of course, when I say printing too much money, nowadays, that's a figurative statement. The Federal Reserve creates money through open market operations and balance sheet operations, things like that. But creating too much money, creating too much liquidity, however you want to phrase it, if you're creating more liquidity and more money than the economy needs at a current price level, it's going to wind up bidding up prices. That's what inflation is. And that's what we got a couple of years ago. It became really bad. Now, I tell my Democratic friends that, you know what? This wasn't necessarily Biden's fault because the Fed, stepped on the accelerator and started expanding its balance sheets in a radical fashion back during the pandemic in spring of 2020 when Trump was still in the White House. So in some sense, you could say it was the Trump Federal Reserve that started the problem. Now, of course, if Biden even knew what the Fed was, he probably would have applauded that. And certainly all through 2021, when Biden was in the White House, the Fed kept expanding its balance sheet. That's why we got the breakout of inflation in 2022. And we're still dealing with the legacy of that now. Now, your question, though, was also about the politics of inflation. Joe Biden, at least his campaign team, they know that he has a problem because even though the inflation rate isn't as high as it was, say in 2022, early 2023, consumers are still going to the store and they're saying, well, my soda is still this much more expensive than it used to be. My milk is this much more expensive. Bacon is, we still know that our prices are very high. And in many cases, our incomes haven't caught up. That's the main political problem that the Biden White House has to deal with. That's why his approval ratings on economics are pretty low, is because, even though inflation hasn't increased as fast, people are still behind. Their wages, their salaries have not caught up to inflation, and that creates dissatisfaction. So the White House, because they don't really have any other alternative, they want to make it seem like it's the fault of business. Oh, greedflation, shrinkflation, and I noticed that years and years ago. It used to be that when you bought a thing of ice cream, it was 2 quarts or something like that. And now it's like 1 3/4 or 1.5 quarts. Now, is that because businesses are trying to maximize profits? Of course they're trying to maximize profits. That's their job. But businesses are always experimenting. What will consumers accept? In a free enterprise economy, consumers are the ultimate king. And so if you're a company and your profit margins are being squeezed or you're losing money, you have inflation in terms of the cost of your inputs, well, you have two choices. You can increase the price of your product and keep it the same size, or you can sell less for the same price. And you're going to make whatever decision that you think will make consumers happiest, or in this case, least unhappy. And that's why we sometimes get shrinkflation. That's why we sometimes get a lot of these policies that might annoy us, but it's not businesses being any greedier or more profit maximizing than they ever were. It's simply businesses dealing with the reality of what their costs are, what the competitive situation is in the market. And if they think that we'll be happier with a smaller package, that's the route they're going to take. But ultimately, the fault, of course, is with the government's bad monetary policy.
Well, that's right. Yeah. Great. Well put there, Dan. And I think you hit on a lot of key points there. One of the things that I always want to ask them, right, to my Democrat friends is to say, look, if they're being greedy now and there's greedflation, why weren't they have greedflation before this? Why hasn't there always been 5%, 6%, 8%, 9% inflation whenever it was 1 or 2%? Now that's how we measure it and everything else. But I think it just shows you at least that same basket, whether it's then or now, should be increasing at a faster rate. Why did they all of a sudden become greedy and start to raise their prices tremendously? And to your other point, though, which I think is key to all of this, is that consumers have a lot of sovereignty. It's not that the businesses can just force all these higher prices on us. Then you choose to not buy that. You can go somewhere else. You can move with your feet. You could do a lot of other things in the economy that they don't want to give them the credit for on the consumer side, unfortunately. And now we have all this government that wants to take the place of that, unfortunately, right?
That's sadly the case. I have to remark when you asked your friends why weren't businesses doing shrinkflation 10 years ago. I dealt with that all the time. Remember the global financial crisis? The left said this is because of Wall Street greed. And I would ask them, well, weren't people on Wall Street greedy in the 90s? Weren't they greedy in the 80s and in the 70s? Why did we suddenly have a financial crisis in 2007, 2008? It wasn't because Wall Street suddenly got greedy. It was because we had an unfortunate, intermingling of bad monetary policy and these corrupt housing subsidies with Fannie Mae and Freddie Mac. And that's what, in effect, we were rewarding financial firms for giving dodgy mortgages that they shouldn't have given because Fannie and Freddie made it profitable to do that. So yes, there is greed. As Milton Friedman said, every system has greedy people. The question is, are the incentives right? If your incentives are, if you want to get rich, you have to serve consumers. That greed leads us to a more prosperous society. If you have bad government policy, greed leads people to exploit these peculiar, weird, misplaced government programs to line their pockets in ways that hurt the economy.
Yep, that's right. Speaking of this period that we've been in now since COVID and all the excess spending, and I think we've added nearly $10 trillion to the national debt just over the last few years, and that was under Trump and Biden. The Federal Reserve increased their balance sheet from $4 trillion to $9 trillion. It's back down now to like 7.6, but we're still substantially above where we were before the pandemic, which is a reason why this inflation is persistent. It's not transitory. It's not going to just come down, and like Paul Krugman and other economists were saying. But we've also seen the Federal Reserve start to, as they've reduced their balance sheet, that's contributed to higher interest rates as interest rates have went up, which has influenced mortgages and credit cards and everything else. And now we see, whenever you look at that, the CFPB, which is the Consumer Financial Protection Bureau under the Biden administration, they have tried to say, look, we need to protect the consumer. We've seen this from a couple of angles, Dan, where there'd be the FTC and their antitrust policy, which is bad news by itself. There's a lot of things that go into there. But we've also seen this from the junk fees sort of idea, that why are credit card companies charging so much for these late fees and everything else? They've talked about concert tickets or going to a sports, like a soccer game or any other type of game. You pay all these high fees. All these are considered junk fees to them. I know you've done some writing on this, Dan. Where do you like to start with this sort of issue of junk fees?
Well, let's look specifically at the financial industry. And the first thing I do when I wind up talking to reporters or congressional staffers, or even just, on the softball field with some of my buddies who lean left on the issue, the first thing I tell them is that the banking industry, compared to other industries like high tech, it's not a high profit industry. And when you're not a high profit industry and you're dealing with things like making consumer loans, so let's just think about credit card balances. Guess what? A lot of people don't pay back their credit card. They don't make their credit card payments. And that means that the financial institutions are losing money. How do they try to deal with that? Well, they, of course, always try to assess the risk of individual consumers. But in general, of course, they put on things like late fees, and to compensate them for the risk, because again, they're not a high profit industry. They're trying to figure out how to keep their prices down for the consumers who pay their balances back on time. And that means that they have these fees. And of course, I've missed credit card payments before, mostly because I'm just stupid and it's the 10th of the month. I didn't, it galls me. $29 payment, but I realize it was my fault because I wasn't paying attention. Now, maybe heaven forbid, someday I'll be in a worse situation and I don't pay back my credit card on time because I simply don't have the money. That's unfortunate, but is it really fair to ordinary consumers that they should have to subsidize the fact that I can't pay back the money that I owe the credit card company? So it's sort of a fairness issue, just like during the financial crisis. Should people who have paid their mortgages on time been bailing out the people who didn't pay their mortgages? Or think of student loans. People who pay back their student loans on time. Should they, in effect, be told that they were chumps and suckers because Biden now wants to unilaterally provide student loan relief for people who, with full knowledge, took out a loan and now simply want to welch on that loan? So there's a fairness issue here, in addition to the economic issue of if banks are going to lose money, they're going to try to recoup that money somehow. They have no choice.
Yes. Yeah. I think you're exactly right. And I mean, there's also something about personal responsibility. Unfortunately, there's a cost to having that late fee or late payment that you put in there. And so if you didn't meet that deadline, it's kind of on you. To your point about maybe you forget. I try to make a lot of these automatic payments so that way I won't forget. But sometimes it happens. And it could be just that, like, it's an accident sort of thing that happens, but it was on you. The personal responsibility is there. What I think is interesting is that there's this new rule by the CFPB on these late fees for credit cards. And, if you go through some of their write-up they have here, which I'll put in the show notes page at vanceginn.substack.com, but they talk about, credit card companies charge approximately $12 billion in 2020, which represented more than 10% of all credit card interest and fees charged to consumers. And what they're recommending from the CFPB is to lower the immunity provision dollar amount for late fees, so the late fees charge, to $8 instead of the $41. They say, you know what, $41 is too high. It should be $8. I don't know how they know that exactly, but that's what they're coming up with. They also say to end the automatic annual inflation adjustment. So they don't want that inflation adjustment there. And then cap late fees at 25% of the required minimum payment. So, from their angle, playing devil's advocate here, Dan, these credit card companies are they're price gouging the consumer with such high late fees, and they're charging an inflation adjustment and all these other things. How can this be good to those credit card consumers? And it's going to hurt them. Why would we want them to charge so much?
Well, in some sense, those bureaucrats are right. If you have high late fees or high interest payments on unpaid balances, that does hurt them. But as you talked about, there is an issue of personal responsibility. You're signing a contract. You're agreeing to pay back on time. If you don't pay back on time, you have to pay a fee. Now, this gets back to what we were just talking about. If they don't pay back on time, and because credit card companies have major issues with some people simply deciding they're never going to pay back, they have to somehow spread those costs out. Now, should those costs be spread out so far that the consumers who are paying their balances every month on time, should our costs go up? Should we have to pay higher annual fees? Should we lose things like airline mile points because the credit card companies have to compensate for the bureaucrats in Washington suddenly interfering with their business model? There's no such thing as a free lunch, which is something that you and I'm sure,
yes,
as economists are very familiar with. Well, if there's no such thing as a free lunch, if the government is going to tell these credit card companies, you have to charge less to this group of consumers over here, guess what? It's like pressing on a balloon. It's going to pop up someplace else. And I like the miles I get from using my credit cards. I don't want to pay a, $95 annual fee or whatever,
right.
But if the government's going to intervene and poke over here, something else is going to happen over here. Unintended consequences, second order effects. I mean, these are all things that, what was it Bastiat said? The difference between a good economist and a bad economist is a good economist looks at the scene, i.e. the bureaucrats imposing these caps and price controls. But we also look at the unseen. How are financial institutions in a competitive marketplace where they're trying to keep their shareholders happy? How are they going to respond? And they're going to respond in ways that make people who pay their bills on time worse off.
Yep. And to just add to that, yes, and it also will keep credit going to the people who need it the most. Because they'll have to ration it some way. So if they can't get the late payment from you, then maybe they'll want to go deeper into your credit to see if you're likely to pay. Because if not, they just won't give you the credit card to begin with, right?
Oh, exactly. If you're one of these financial institutions and you know that a certain class, let's say, I'm sure young people, I imagine, are worse than old people at dealing with their credit card balances. So if you're looking at, say, people aged 21 to 25, and they have a late payment rate of, I'm going to make numbers up, 9% versus say people 40 to 60 have a late payments of only 1%. And all of a sudden the government comes in and says, you can't charge these late fees and other things like that. What are you going to do? Well, let's just start stop giving credit cards to people 21 to 25 or to people with low income or maybe they'll redline. They'll say, oh, well, look, the Hispanic default rate, the Black default rate, and so on and so forth. And they'll start playing games like that. We should be celebrating the fact that we have a very strong financial industry in our country. We have enormous ability for even low income people to access credit. Is that always going to work out perfectly? Are some people going to get in over their heads because they don't have the self-discipline not to put things on a credit card? Yeah, but they should deal with the consequences of that as part of the learning process. We were all dumb and young at one point in time. Hopefully we learn. But the idea of the government coming in and just imposing a flat rule where you're going to have all these unintended consequences we just talked about, including denial of credit for people who are young, people with low income. And that, I think, is going to be very unfortunate.
Yeah, it really is. And you think about this here lately. I mean, we were talking about the COVID and the pandemic, and then we got to talk about all the checks that were sent out. There was the unemployment plus ups, massive amount, $600 per week you could get in addition to the state funds. People became not only dependent on that, but they almost expected to be able to spend more money than what they normally would have earned. And now, as a lot of those excess savings, there was a huge increase in excess savings during that time, which just means more savings than they normally would have. A lot of that is being depleted now from higher inflation, from maybe some people didn't go back to work as quickly as they otherwise would have. And so they've depleted that. And now credit card debt is going through the roof. I mean, we're over $1 trillion now. And so it's no wonder that we have higher interest along with the Fed, contributing to higher interest rates as well. So you got both of these things going on at one time. People do not have the personal responsibility. In fact, what we call in economics, using that jargon you talked about earlier, but moral hazard, where moral hazard is where you just take on more risk than you otherwise would. And a risk here is overspending compared to the income that you're bringing in. And no wonder that we're seeing such high credit card bills and everything else. And this sort of approach would make it worse, right? We've got to get back to some sort of personal responsibility again.
Well, there's two things I want to say in response to that. First of all, here's a great definition of moral hazard for your audience. If you own an old junker of a car that's only worth $5,000, but if an insurance company allowed you to write a $20,000 policy on it, you'd have a big incentive to drive that car into a lake because you get a $20,000 payout for a car that you only paid $5,000 for. You don't want a system that in effect rewards people for doing the wrong thing. That's what moral hazard in my mind is all about. We talked earlier about Fannie and Freddie buying bad mortgages, in effect giving financial institutions an incentive to write bad mortgages. That's another example of moral hazard. Now, in terms of the underlying public policy issue here, I worry about something called societal capital. What's societal capital? It's the ethics of your population, the work ethic, the willingness to work hard, the willingness to obey the rules, things like that, the willingness to engage in deferred gratification. In other words, a culture of savings rather than a culture of consumption. Well, government erodes societal capital all the time. It punishes us for working hard. It punishes us for saving. It punishes us for being responsible, and it rewards us and subsidizes us for being indolent, for overspending, for trying to live off others, for having a work ethic. And so in my mind, we almost are going to leave the field of economics and get into, I don't know, psychology, sociology. I don't even know what you'd call it, Vance, but this idea that, I guess the simple way to think about it is I don't want the United States, the people of the United States, to suddenly become a bunch of French and Greek people. Where they think government owes them a living, and because I think once you in effect destroy that culture of self-reliance, self-determination, and you make people think it's government's job to provide them with things, I wouldn't be optimistic about the future of our country.
No. Yeah, because once you reach that tipping point, there's really no way to return.
Oh, what? Hold on.
Okay.
3 months ago, I would have agreed with you. But look at what happened in Argentina.
Yeah, I knew where you're going.
A country where for decades, politicians of all parties told people it's government's job to give you things and the entitlement mentality. But it got so bad, they actually elected someone as crazy as you and me. You know, when I say, of course, I'm joking. We're not crazy, but we're crazy in the sense that we're outside the sort of establishment viewpoint of big government and stuff like that. So Javier Milei in Argentina, I mean, if he can actually convince that bad legislature to go along with his big reforms, he could actually save a country, a country that used to be one of the 10 richest in the world 70 years ago. It's gone downhill so much because of big government. It's sort of a warning sign, of course, for what we're doing and for what the Europeans are doing. But if he turns it around, boy, would that be the greatest story in terms of economic policy.
Amen. Yeah, no, you're right. I like the optimism. We need that optimism. And in fact, you know, I've been talking to a lot of friends and those who are influencers and politicians. I was like, where is our Javier Milei? Where are the people that are here that are talking this sort of game now in politics? There's just not a lot of us anymore. Unfortunately, there are, you know, those of us who are trying to be influencers and hopefully talking to the right people, but the ones who get the loudest oftentimes are the ones that want more big government. And it's unfortunate.
You know what you have to do? Give a bunch of speeches and have a chainsaw with you and see if you can sort of rekindle that Javier Milei magic.
Yeah, that's right. And then pulling the agencies off the whiteboard. I love that. You know, and you know, it's just keeping on that for a second. You've been posting about this. I have too, where on Twitter, or formerly Twitter X now, how just in a couple months, he's already balanced the budget. Now that's just for 1 month. Let's see what happens after that. But dang, talking about massive deficits before that and then balancing the budget that quickly, that's just unheard of. It's wild. And it reminds me of something that I think will bring into the next part that I like to talk about is kind of the overspending here in America. But that overspending by Congress and running up these massive deficits, $2 trillion a year as far as the eye can see. And that's on rosy scenarios that we're not going to have recessions, that we're not going to have any other emergency spending or wars or whatever else they're going to end up doing. That's a rosy scenario. No wonder people don't want to be responsible. Their own politicians, which I think you and I would say, well, they're politicians, so they're not going to be responsible. But some people look up to them to be responsible, and they even get their own house in order. It used to be a situation, Dan, where some would say the deficits don't matter. That you and I didn't agree with that, but some would say deficits don't matter because there's such a small share of the GDP. Interest rates are really low. We don't really have a lot of inflation. So it's like, Vance, Dan, y'all are out of your mind. Going back to crazy earlier, y'all are crazy. Y'all don't know what you're talking about. But we started to see the direct effects of this here recently, and I think it's always been underlying across the economy with a misallocation of resources. But we've seen higher inflation. We've seen the higher interest on the debt. $1 trillion a year now as we're paying net interest payments on the debt. You know, how can we get control of this, Dan, from a fiscal perspective? We got this fiscal commission they're going to talk about or trying to put together now. I'm skeptical of it, but I wonder where you're at on some of this.
Well, I'll answer the last question first, which is that I don't trust a fiscal commission when Chuck Schumer is going to appoint half the people. Or maybe even between Biden and Schumer, they'll appoint more than half the people. It's just going to be a stalking horse for a tax increase. And tax increases, empirically speaking, they tend to make things worse because the economy slows a bit and politicians, they respond to the expectation of higher revenue by spending more money. They can't help it. It's like putting blood in the water with hungry sharks around. So I think higher taxes, even though on paper it might lead to lower deficits, in reality, it leads to more spending and higher deficits. Now, I don't go to sleep or wake up worrying about deficits. I worry about the size of government. Yeah. Whether you're financing government with borrowing, that's bad. If you're financing government with taxes, that's bad. You're financing government with printing money, that's bad. Our fiscal problem 100% is government is too big and it's growing too fast. And we've talked before about how fiscal policy should be very simple. Just make sure that if the private sector is growing this fast, make sure government grows less than that. Now, the bigger the gap between the growth of the private sector and the growth of government, the faster you solve your fiscal problems, the faster you reduce the burden of government spending as a share of economic output, the faster you wind up with a budget surplus instead of a budget deficit. But controlling the growth of spending is the only solution. If I thought for even 1 second that a fiscal commission would endorse something like Colorado's taxpayer bill of rights, that spending cap, or if they would endorse something like Switzerland's debt brake, that spending cap, I would be cheering from the rafters. But I'm not optimistic that we'll get those kinds of policies. Instead, I worry that we'll get something like the old Simpson Bowles from about 10 or 15 years ago. Lots of taxes and then some price controls on the healthcare entitlements. And of course, the price controls, they have a half-life of milk in the Texas sun in the summer. They don't stick. You have like these doc fix gimmicks and stuff like that. But at the end of the day, there's no real change in the burden of government. And of course, my nightmare scenario is you actually get even more government because once, as I already said, once taxes are on the table, the politicians can't help themselves.
Yep, no, that's right. And there's a lot of good research on this too, Dan, not only the research that you've done, and I've done some of this as well, but even folks like Alberto Alesina, in his book Austerity, they talk, it's a great book. People should go check it out. Put the show notes page. It's pretty short too, but he goes through all these different countries and what's been happening in austerity measures by Greece and other countries. And he looks at those places that have raised taxes versus cutting spending. And in every place that he looked at, the places that raised taxes, they were not able to balance their budget. Exactly what you mentioned earlier, because they had less economic growth and they just used the tax to spend more. But the places that cut spending and focused on the spending side, they were the ones that were able to balance their budget quickly. And a great case for this right now is Argentina. That's where they are focusing, not raising taxes, but on cutting spending. And they've done this so quickly. It's really shocking. And of course, you and I are in favor of spending limits. Colorado's taper, I think, is the gold standard. And, I always think about your golden rule that you talk a lot about, Dan, in your International Liberty blog about, look, you've got to make sure that spending grows less than the economy. And that's one reason why I think population growth plus inflation is such a key measure. Maybe it's not perfect. Maybe there are other ones that are out there. I want the government to grow less. In fact, I want it to be cut. It needs to decline. But at least that starts to get you to some realm of possibility to measure the average taxpayer's ability to pay for government spending. I've done some research here recently, Dan, where over the last 20 years, if Congress had just matched population growth plus inflation, instead of adding $20.2 trillion to the national debt, it would have only increased by $700 billion. That's a huge swing. What, $18.5 trillion in a better direction, or $19.5 trillion, I should say, in a positive direction for taxpayers. Because as you mentioned, whether it's higher taxes or lower spending or debt or inflation, we're going to be paying for this at some point.
Yeah, and
it's crazy.
I've done similar calculations. I calculated going back to the turn of the century, if we had a policy like the Swiss debt brake, it's called the debt brake, but it's really a spending cap, we wouldn't have our massive problems that we have today. Government would be much smaller as a share of GDP, and we wouldn't have run up that $20 trillion of debt that you've talked about.
Yeah. Well, I hope they were able to get control over it. I know there's a lot of need for it and a lot of work on it that needs to be done. And we kind of have a lot of the answers. It's just a matter of where's the political will. And it would be great if, it looks like it's going to be President Trump and the Republicans and Biden for the Democrats in this general election. It would be great if we could hear them talk about spending. My guess is they probably won't, though, a lot. Don't you think?
Oh, I think Biden will talk about spending, but he'll talk about expanding it. I mean, remember his Build Back Better plan? I mean, that was $5 trillion of additional spending over the next decade. Now, he got through some of it with the misnamed Inflation Reduction Act, but there's still a massive expansions of the welfare state where if the Democrats wind up with total control in 2025, I really worry that we're going to take a big step toward becoming Greece. I mean, we're already sort of slowly stumbling in that direction because of demographic change and poorly designed entitlement programs. But, Biden in effect was saying that's not good enough. Let's drive to a cliff at 90 miles an hour instead of 50 miles an hour. Now, what about Trump? Sadly, he has said he doesn't want to touch the entitlements at all. And if you don't touch the entitlements, guess what? You are saying unavoidably that you want massive tax increases on lower income and middle class households. If someone is against entitlement reform, there's no way in the long run that there's any alternative. They're going to wind up doing what they did in Europe. Massive value-added taxes, massively higher payroll taxes. Now, why am I focusing on those? Because Europe has learned that you can only squeeze the rich so much. I mean, we actually tax the rich at about the same level that the Europeans do. They have slightly higher income tax rates. We have slightly higher double taxes on saving and investing, but we both tax the rich about the same amount. The reason Europe has much bigger welfare states than us is that they tax the you-know-what out of lower income and middle class people, not just the VATs and the payroll taxes. They have much higher energy taxes, all sorts of other ways that they have figured out how to squeeze ordinary households. I worry about that being our future if politicians put their head in the sands and say, or the heads in the sand, and they say, oh, no, we can't touch entitlements. Well, I want to fix entitlements simply because it's good policy, but we also desperately need to fix the entitlements because of the fiscal implications. I don't want a European-style welfare state in America with the slow growth, no job prospects, the dismal economic future for the American people.
No, that's right. That's right. Well, as we're wrapping up here, Dan, it's been a great conversation. A lot of key topics that are going on. Are there any other things that you've been working on or looking at that you'd like to share with us?
A couple of things that I think are worth pointing out. International bureaucracies. The OECD is leading this effort for a harmonized global corporate minimum tax. Unfortunately, they've made a lot of progress on that. But guess what? Once they get that thing in the bank and all the countries forced to comply with it, there's no question in my mind that those bureaucrats who, by the way, they get tax-free salaries themselves, but they run around the world trying to push for higher taxes than everyone else. Once the global corporate minimum tax is in the bank, they're going to start saying, well, it shouldn't be 15%, it should be higher. But even worse, they're going to start saying, well, we need global minimum taxes on capital gains, on personal income, death taxes, wealth taxes, who knows? So the OECD, which of course, unfortunately, is subsidized, the lion's share of its budget comes from American taxpayers. That's really upsetting. But then another international bureaucracy, the International Monetary Fund, we already talked about moral hazard. The IMF is like one giant moral hazard machine with the bailouts that they give to profligate countries. And I just worry that as the IMF has taken a bigger role in the world economy, it's not just that they always are in favor of bailouts, but the IMF and the OECD, for that matter, in terms of their advice that they give, because they fashion themselves as think tanks for the world, they're pushing for higher taxes and bigger government. I mean, I'm not even joking. Their big advice to the developing world, to poor countries is, oh, if only you had higher tax burdens and bigger burdens of government, you would somehow grow faster. And it's like, show me a shred of academic evidence. I mean, the only rich countries in the world became rich in the 1800s and early 1900s when government was very, very small. No country has ever gotten rich with big government and high taxes. And yet that's what these international bureaucracies like the IMF are pushing all around the world. And it doesn't have an immediate impact on Americans living our day-to-day lives, but it should upset us that our tax dollars are being used by these tax-free international bureaucrats to push bad policy all around the world.
Yeah, it's a major concern for me as well. And I think, maybe leaving this on a positive note, optimism, is this sense of optimism to you like it is for me, where you have these states that are doing a good job here in the America of limiting spending and cutting taxes, this kind of flat tax revolution that's been happening. And we're seeing many states and states that I've been working with, and you probably have too, they're trying to get to zero. I mean, I think that these are some of maybe a positive thing to kind of leave the audience with.
There are two things that are happening on the state level that give me a feeling of optimism. First, as you already mentioned, is we are seeing this tax cutting revolution, this tax reform revolution, states adopting flat taxes, states lowering both personal and corporate tax rates, and Some states, fingers crossed, knock on wood, whatever analogy you want to use. If a state could actually get rid of its income tax, that would be such a great development. But we also have this school choice revolution happening. Yes. I mean, who would have thought 3 or 4 years ago that we now would have about 10 states with a full school choice? And, depending on what happens in Texas with the state legislative elections, and in Georgia, we will probably have other states starting next year. That's something that I think really is great, because you're talking about the long-term ability to have an education system that actually does a good job of preparing students to learn how to think and have critical analysis, to get away, of course, from some of this really silly political correctness that and sort of dumbing everything down that you get with government schools. So, there are good things happening at the state level. Not maybe if you live in Illinois or New York or California, but a lot of states we're seeing some good developments. And I guess this is a chance to close on something that I think I should have already mentioned. Decentralization and federalism should be a key component of the agenda for people like you and me and our erstwhile friends in Washington. If you have decentralization, what happens? States have to compete with each other. Why is Switzerland such a successful country? Because almost everything outside of national defense happens at the canton level, their states, and the municipal level. And when that happens, people can easily vote with their feet. It's pressure on politicians to be responsible. You have diversity, jurisdictional competition, all sorts of positive development. So I would like to see, it'd be a miracle if Biden ever did the right thing. But, I guess there's a chance. Trump is sort of, it's unpredictable where he'll wind up. But wouldn't it be great if he actually promoted genuine decentralization? What was Medicaid reform based on? It was based on kicking it back to the states, repeating the success we had with Bill Clinton's welfare reform. And then once that happens, states can experiment and innovate and figure out what's the best way of providing healthcare to poor people without creating perverse incentives. So by all means, let's get as much decentralization and genuine federalism. We don't need this one-size-fits-all world where a bunch of Washington bureaucrats are trying to design systems that are almost guaranteed to fail.
Yeah. Amen. Well put, Dan, as usual. And let's keep fighting. And I hope one day we'll also see a responsible or sustainable budget revolution where the spending limits are influencing everything there. So we have school choice and tax reform and regulatory reform and sustainable budgeting. How about that? That'd be awesome. Well, it's been a pleasure talking with you today. God bless you and your family, Dan.
Well, thank you. Same to you.
Thank you. And for the audience, please go and leave us a 5-star rating if you like this conversation. Share with your friends and family. And remember, you can always find all the show notes with links at www.vanceginn.substack.com. And until next time, let people prosper.